Drop a like and do share. Leave your comments and do not forget to subscribe for more videos.
Hi everyone, welcome to Edupedia World. I am C. Radhika Singh. In the last session, we were discussing the role of Treasury Management at different levels. Well, this role is not same as Financial Manager. A Financial Manager plays a vital role in maintaining the finance function of the organization, which is one of the key elements in a corporate. So, in order to secure a sound financial working, a finance manager has to perform, or you can say has to take decisions regarding the investment functions and the financial functions. So, the investment function, it dealt with the proper allocation of the funds in each activity so that an optimal return could be earned from such allocation. The short term and the long term investment strategy that has to be planned in line with the objective of maximization of the wealth of the shareholder. So the utilization of the funds as and when they accrue, that should take care of the two prime considerations. One is there should not be any idle funds because they have their own cost also, opportunity cost, and there should not be any such tightness in the funds that there is a threat of liquidity. In a finance function, the finance manager is responsible for bringing into the finance, or you can say for maintaining the finance as per the capital structure of the organization. In order to manage those finance, the fund should be acquired accordingly. So, in order to perform both these functions, investment and financing, the finance manager has to keep a macro view of the requirements and accordingly the use of funds to be taken. So the finance manager, you can say, he has to arrange the funds within the approved capital structure, and the treasury manager is concerned more with the management of those funds. So finance manager is responsible to get those funds, and treasury manager has to manage those funds as per the framework, you can say, which is being framed by the finance manager, whatever the parameters have been given. So if we differentiate between the financial management and treasury management, so when we talk regarding control aspect, the financial management plays as an integral role of the management. He has to prepare an adequate plan to control every operation of the business, while a treasury management is responsible to execute whatever the plan the financial management, or you can say financial manager, has planned for the finance function. When we talk from reporting aspect point of view, the financial manager has to prepare the overall financial reports of the firm. So the overall finance is in the hands of financial manager. But a treasury management is only responsible to maintain the income and expense budgets. So you can say that treasury management is a small part of financial management. Next aspect which could be discussed, or which can differentiate between treasury management and financial management, is strategic aspect. So financial management overlook for the overall financing strategy of the firm, but a treasury management is only responsible for creating a proper system for accounting. So a financial management is concerned more with the creation of the assets of the firm, and a treasury manager is responsible for the net assets of the firm. So total assets is being overlooked by financial management if we take a balance sheet point of view, and a treasury management just look at the net asset picture of the firm. So a treasury management plays a role. A treasury manager plays a significant role in an organization because it is somehow linked with many departments of an organization. So if we discuss that what role a treasury manager play, it plays a role of the watchdog because it has a duty and it has to keep its eyes and ears open so as to communicate all the financial transactions to the top management. And also if there is any fraud or any area where fraud could be reflected, or this, so that could be mitigated at the right time. Also, we discussed that it is responsible for liquidity and risk management to make the funds available at the right time and to deploy them at the right time. So, the treasurer plays as one of the source of information at the top management by communicating all the important, or you can say, key financial transactions to the top management. So not only procuring of the funds to the company, it also set up the overall corporate financial objective. So because of this, the treasurer plays a vital role and it has a responsibility to ensure that there is a compliance with all the statutory guidelines. Next thing, it has to maintain an integrity role because it has to keep an equal treatment with all the departments in an organization. He has to keep his professionalism and impartiality while maintaining the, or you can say while approving the demands of the expenditure from various departments. So a treasurer should have a leadership role because it should have an ability to network with every other department in organization. So integrity and impartiality dealings is one of the key aspects that a treasurer should keep. And also, a treasury manager is required to keep himself with all the developments in the field. So he should be able to pick with all the latest developments that are likely to affect the organization and accordingly educate every department about the impact and how to deal with it. So a treasurer should be very open minded and is ready to accept the new ideas rather than treating the new ideas, or you can say, as a threat for his own working. For carrying out the activities, a treasury management use certain tools, or you can say very techniques, to compete in this environment. So the various tools for treasury management are analytical and planning tools. So analysis of the data and information is very necessary for planning and budgeting. Performance budgeting, you can say, is referred to as the setting of physical targets for each line of activity. For performing that role, a treasurer should use various analytical tools to analyze and accordingly prepare the budget for various departments. Another tool which is used by the treasury manager is zero based budgeting. So by zero based budgeting means that every department has to prepare a budget from its scratch. So no prior year budget is being used. Every penny of the amount being parked for that expense amount is to be justified. So zero based budgeting ensures that there is no idle funds and the funds are appropriate, or you can say adequate, as per the requirement of the organization or the department. The next is financial statement analysis. So financial statement analysis means analyzing the intrinsic value, or you can say worth, of the organization. So financial analysis is required because a treasurer has to, basis which has to decide whether it is viable to invest into that organization or not. And the last tool is internal treasury control. So internal treasury control is a control formulated in order to control the treasury in an organization. This tool aims that there is an operational efficiency, so that there is any removal of the wastages, or you can say inefficiencies in the promotion, or you can say that whatever task that is being performed, that is cost effective. So this control is generally used while planning, or you can say budgeting, and it is more concerned with the flow of funds, you can say cash and credit, and all the financial aspects in an organization. So these are the various tools which are used, these four tools, by treasury manager. This is also a very important question from your exam point of view regarding the tools in a treasury management. This topic, treasury management, is more theoretical, and theory questions are there from this chapter in the past examination. That's all is there in this chapter and important. Thank you. Have a nice day and just keep smiling.